Welcome back, guys, to the lesson 2 in this series of forex trading for beginners. Today we are going to discuss what is traded on the foreign exchange market, and lastly how to read a forex quote. Now we can all agree that in the previous lesson we said that forex trading is the simultaneous buying of one currency and selling it for another, or vice versa. In other words, we said that when these currencies are being traded, you are actually buying another currency using another currency in order to buy it. So if we are to ask ourselves what is being traded on the foreign exchange market, then the answer is pretty clear. It is currencies. We also agreed that when we are trading currencies online or online forex trading, we are doing it through online exchange offices that we call brokers. Now, this whole setup might seem as if it is a bit confusing. Why? Because we are now saying that instead of doing it physically by going to the bank, you are now actually doing it online through these online exchange offices called brokers. Out of a whole bunch of currencies that can be traded on the forex market, we are just going to be focusing on the following 8 currencies, which are the United States dollar, the euro, the Japanese yen, the Great Britain pound, the Swiss francs, the Canadian dollar, the Aussie or the Australian dollar, and lastly the New Zealand dollar. Now, when we are reading a forex quote, currencies, when they are being written in a forex quote, they are not actually written in their full names, but they are written in 3-letter words. For example, when we say of the Australian dollar, you will find it being written as AUD. The first 2 letters will represent the country where that currency belongs to, and in this case this will be Australia, and then the last one will represent how it is called out. So we say the Australian dollar. We also have USD, where we say the United States dollar. We also have the CAD, the CAD, where we will call the Canadian dollar. We also have the CHF, where we will call the Swiss francs. We also have the GBP, one of my favorite, where we call the Great Britain pound, and so on and so on. Even the NZD, which is the New Zealand dollar. Maybe I will just have to call out all of the 8 currencies that we said that we often trade. We also have the euro, right? This one you just have to know it as it is, because it belongs to the European countries, right? And then lastly, Japanese yen. So JP, Japanese yen. Okay, so like we said, forex trading is the simultaneous buying of one currency and selling the other. So to make things easier for us, the brokers were very nice and they quote currencies in pairs. They don't quote them one-on-one, right? They just quote them in pair. For example, you see Euro USD, GBP USD. These are one of the these are some of the commonly traded currency pairs. So when they are being quote, right, they don't quote them as, let's say they just quote you euro is equal and tell you the exchange rate of that euro. No, they quote it actually in pairs. They quote them in pairs. So we have euro USD, we have GBP USD, we have USD CAD, right, and USD JPY. So it's JPY, right, and so on and so on. They are just doing this to make things easier for us, such that when you buy a pair like Euro USD, if you click buy on a pair like Euro USD, you're actually buying euro and selling USD. So in other words, you will be buying euro using USD, and if you are to sell again euro USD, right, if you click sell on euro USD, you're actually selling euro and buying USD. So in other words, you're buying USD with euro. I don't know if I'm making things clear for you, but I'm trying by all means to move slowly so that you can actually understand what is going on, such that when we then reach on where we are saying how to actually read the actual forex quote, you will be able to understand. Now, when viewed from your MetaTrader platform, you will find that Forex quotes, they are shown like this. As you can see, it says here quotes, right? This is a screenshot from my MetaTrader platform from my cell phone, right? And as I was telling you, you can see that these currencies, they are being quoted, right, in pairs. You have Euro USD, GBP USD, USD, CAD, odd USD. One thing that I also want you to appreciate is the fact that whenever in a quote you find that a currency is being quoted against the US dollar, that is known as a direct quote. So you find Euro USD, GBP USD, USD, CAD, odd USD. That is what we call a direct. If I am to write that for you, we call that a direct quote because there is the involvement of the US dollar. But when you find out when you have something like maybe Euro CAD, right, now this is no longer a direct quote, but we actually call this one a cross quote. It's a cross quote. Why? Because there is no longer the involvement of the United States dollar in it, right? I just wanted you to know that. Now, as I was telling you, this is how your Forex quote will look like when viewed from a MetaTrader platform on your cell phone, right? It's quite the same with other trading platforms. You'll find that yes, it might look as if it's somewhat different, but it's the same idea. All right. Now, Euro USD, right? We find that we have got this price, right? This price again, and this price. I'm going to explain all of them in a moment. Now, this first one, we call it the bid price, right? I don't want to go much deeper into definitions because there is a whole new lesson, right, where we'll discuss the crucial forex definitions that you need to understand. So for now, just understand that this first price that you are seeing here is called the bid price, and then this one is being called the ask price. All right. Now, the difference between the ask and the bid price is what is giving you this spread, right? Don't just take my word for it. Let us do the calculation, right? So you find that the ask price is always higher than the bid price, right? And the reason for that, should I tell you? All right, let me maybe just tell you for interesting. The ask price is always higher than the bid price. Why? Because the ask price is the price at which you are going to buy a current pair when you are trading, right? So one thing you just have to appreciate is the fact that if you are to go to the bank, if we were to take an example of you going to the bank and you want to buy a currency, right, you find that the price at which the bank is willing to give you that currency, right, is different from the price that the bank is willing to buy that currency. In other words, if you were to buy USD with your euros, maybe the bank will tell you that we will pay you 10. You are buying euros using USD, right? So they will tell you that from your 10 US dollars, right, will give you 8 euros. But if you are to come back with 8 euros, they are not going to give you 10 USD. You might find that from your 8 euros, they are actually going to give you maybe 9 USD. Now, this difference is what is emanating as the spread. So the ask price will always be higher than the bid price. Why? Because this is the price at which you are going to buy a certain currency pair, right? And this is the price at which the bank or the broker in this case is willing to sell to you. Remember, when you are buying from them, they are selling to you. So it's common sense that someone will always sell at a higher price. It's for their own benefit and buy at a lower price. So the reason why, if the bid price being the price that you are selling at and the bank is the price at which it is buying from you, it is going to be lower, and then the ask price is going to be higher. So the difference between this bid price and the ask price is giving you the spread. So I was about to do the calculations. 1.18044 from 1.18035, right? So you find that 4 minus 5, it can't, right? 14 minus 5, that is a 9. All these will become zeros, and it's 0. So it's 0.0009. Now you might say that here it says 0.00009. Why is here being said 9? It's because when we are quoting these currencies, or when the broker is quoting the spread in this forex quote, they are quoting them in terms of points, right? So the last digit here, right, is giving you the number of points. So you get a spread that is saying 9. In other words, that is telling you that the spread on Euro USD is actually 9 points, right? And also some brokers might not quote the spread in terms of points. They might quote in terms of pips. Again, I'm not going to go much into greater detail on the definitions of all these terms. Remember, I said there's a lesson on these terms. So instead of quoting in terms of points, they will quote in terms of pips. But one thing that I just want you to know is that 10 points is actually equal to 1 pip. So in this case, 9 points is actually 0.9 pips. If we are to try and simplify things for our own good, right, we might say that when we are quoting, right, current pairs, we can write something like Euro USD being equal to 1.33432 slash 1.33440. Now, the first currency that is being quoted, right, is also, I was showing you on that chart, right, is called the base currency. The second one is being called the quote currency, and this is being called the bid price, and lastly this one is being called the ask price. So when you have a forex quote like this, right, in other words, we are saying that if you were to buy Euro USD, right, if we are to try and simplify things, we are saying that, remember we said that the ask price is the price at which the broker or the bank is willing to sell to you, and that is the price at which you are then going to buy. So if you are buying Euro USD, you are buying Euro USD at a price of 1.33440, and if you are to sell Euro USD, you are actually saying at a price of 1.33432. Okay guys, so that is basically it for today's lesson. Until then, I will see you on the next one.